For more on the markets, let's welcome in Mish Schneider, Director of Trading Education and Research at MarketGauge.com. Mish, good to see you. So what are you thinking here? The markets are running up 6-week highs, 5-6-week highs, depending on what you look at. Tech stocks came in and they sort of crushed the NASDAQ. We're getting more later after the bell today. What do you make of it all?
Well, what's so interesting is the last time you and I talked, we talked about the small caps and how they not only had held their June lows, but were holding a 6-7 year business cycle measured by an 80-month moving average. And that until that broke, we weren't necessarily going to get more bearish and could anticipate some kind of a bear market rally. So here we are. So I'm really focused on the small caps still. Not surprising to see tech struggling after not only the big earnings, but the projections going forward of things that we know they have to be worried about. So let's see what the small caps do. I mean, that's really where I think my biggest eyes are, obviously, besides things like the dollar and the interest rates. We still have PCE coming up this week. We have GDP coming up this week. I think we also talked about, I didn't see a recession unless we started to break those big lows of those 6 and 7 year cycles. So it's a mixed bag right now, and just kind of happy to see a little bit of an up market. It's certainly a lot more fun than watching things get wrecked.
Yeah, and you said, some people say, oh, stocks are on sale, and you say compared to what? Give me the perspective of a pro.
Well, basically, when I say that, I'm really obviously focusing on the mega cap stocks that you hear people all the time saying, well, if they have a great balance sheet and you know the company, just go ahead and buy. And yeah, that was very much true when we had declining interest rates and they basically were paying no corporate taxes and they were doing a lot of corporate buybacks, which, by the way, they're still doing. So now we're in a completely different environment. So we don't know what it looks like when you're all of a sudden at a much higher interest rate. And that's really, I think the bottom line is I can't tell you they're on sale because they may get reduced further. And that's really kind of what we're watching right here. We take Microsoft, I think probably would be the classic example. So it looked like 240 was going to be the big key support. It went to 225, went up to 250, now back down to 231 after earnings. Does that mean 225 is the low? I don't think so. So I would be very patient in what does everything mean in a new environment.
So you think these names can go even lower than what we're seeing today?
Yeah, well, partly because I am very, very incredulous about the Fed and what they're going to do in terms of the fact that they've been reactive and not proactive. And I think that's really important for people to remember when everybody's looking for the Fed meetings and the dissension that we're seeing among the Fed. We saw the dissension among the Fed when people said, oh, don't worry about inflation. And other members were saying that, oh, yeah, maybe we should worry about it. Now we get one good PMI number. Maybe we'll even get a better PCE number. But it won't matter, I don't think, at a certain point, because if the credibility of the Fed in general, which is already starting to decline, and we've seen that decline, comes into question further as we go into 2023, if they're not proactive and stay the course, we still have a lot of reasons to believe that inflation may look different than it was after COVID, but inflation is still a very big concern to me, particularly in food and energy, and we're starting to see the precious metals act a little bit interesting here as well.
Yeah, I know. I saw you had gold here. You were watching gold and copper. And before I get to, I have a lot of names to ask you about, but I'll give you a moment to talk about that since you mentioned it.
Well, I think a lot of it has to do with the dollar. And this is kind of where I'm seeing the relationships that we know as classic relationships could unravel. So you think higher yields, flight to safety in the dollar. But then you have Japan all of a sudden doing QE. Obviously, we know Bank of England also did a lot of QE. China now doing QE, especially after their huge drop the other day. So you have to wonder if the dollar continues to decline as other countries are doing QE and we're still trying to do QT, what does that mean? That means that if the Fed pivots at this point, I think that would be initially perceived as yay, but then it would be like, oh, wait a minute, that really puts inflation back out of control. And then, of course, we would start to see the departure between commodities and equities again. And I really still believe that that could be the theme for 2023. Obviously, we have some good numbers to look at for that.
Let's talk about, you mentioned Microsoft and Alphabet, and that you don't think they necessarily hit bottoms and there are not some great buying opportunities. We'll have Meta that we'll be watching for after the bell. You had some thoughts on Chipotle, which is already out with its numbers, and energy as a group. Meta, Chipotle, and energy. Give me some thoughts.
Well, in terms of Chipotle, that actually made a nice move, and I think it's really interesting to look at restaurant chains in general. As you mentioned before I came on, Wingstop did really well. If you look at Cheesecake, a stock we talked about in the past, that's doing well. It reports soon, though. It hasn't reported yet. And so, yeah, I mean, the whole idea of how people, what their spending habits are going to look like is something I'm really studying here. So people still go out to eat. They may not go out as much in fine dining, although I haven't really seen any evidence of that. Travel would be another thing that I'm really watching. People are still traveling. Airline stocks did great. As far as Meta goes, you know, he really has had a lot of bad press, Zuckerberg. And of course, the money they put into the virtual reality glasses did not turn out well. But yet there's levels here that really interest me because I still believe the metaverse could be a very forward-looking thing. And so maybe around 122, it's trading what, about 130 right now. That might be a place of interest. What was the other thing I was supposed to talk about, Nicole? Sorry.
Right, I had said Meta, Chipotle, and energy.
Energy, there you go. Okay, so yeah, energy, well, listen, I don't think that we are done with our energy crisis by any means. We're heading into a winter. I think that we have issues here with reserves. Even though we've tapped into ours, people say we're very close to the bottom of that. Saudis are definitely not looking at raising production anytime soon. And so if we get a really bad snap again in the winter, particularly in Europe, that could be really treacherous. And we've exported so much oil. We have to kind of be careful about making sure we have enough here if we get a really bad winter. So I still think the energy plays are great. You just have to know your risk when you're getting into something that's been so extended in terms of a bull market. But as a former commodities trader, I can tell you that commodities, when they look expensive, can get way more expensive because they become more emotional type of trade.
Yeah, because you said we still like oil and energy in general. Also, you had Palantir on there. You like government contracts, biotech, some. You mentioned Teva Pharma. Any other final thoughts? I don't want, I think the reason why I pack my questions, and I'm sorry for that, I didn't mean to overload you, is because you do have a lot of great, thoughts on different areas. You know, you said you like some staples and you're watching the consumer, but if you feel to comment on any of the staples or the consumer or Palantir or Teva.
Well, what I'm really trying to focus on, besides the consumer spending habits and how they may change going into next year, is also I'm looking at where the government is contracting with companies to spend money, because they have been spending money on things like EVs and infrastructure. And big data, which is a contract they made with Palantir. So we've been in Palantir for a while. It's not exactly wowing anybody, and it hasn't reported earnings yet. But I'm starting to think about what has really been undervalued that could actually grow. Now, Teva's an Israeli company, so I would wait for the earnings on that. That's coming out soon. But believe it or not, you know what I've added to my list, and I don't think I sent this to you, was I'm back looking at 3D systems, because it's another technology that has gotten so beaten up. But as things start to progress in terms of looking at other technology to create what we can't grow, not that I would ever in a million years eat a piece of 3D printed food. The idea, though, is with building and things like that, I still think that DDD is pretty undervalued here. So that's what I'm trying to do. And I'm trying to find things that could excel because of help with not only government macro themes, but like I said, even watching the dollar, the rates, commodities that have been sort of forgotten about, like precious metals. This is kind of where my mind is going right now. But we still have a lot of cash.
Mish, thank you always. Always wonderful to chat with you. I enjoy our conversations very much. Mish Schneider, MarketGauge.com. Thank you.